The biggest barrier to building wealth isn't the stock market, your salary, or even the economy, it's you. It's the stories you tell yourself, the doubts that creep in, and the habits you repeat every day. Most people think the problem is out there. But the truth is, your mindset is the most powerful force shaping your financial future. That voice in your head saying, investing is too complicated, or I'll start when I have more money. Those are just excuses costing you a fortune. Every time you put it off, you're letting fear and uncertainty hold you back from opportunities that could change your life. The truth is, you don't need to be a financial expert or have a huge paycheck to get started. Every day you delay investing is a day you're missing out on free money that could be working for you. Time is your greatest ally when it comes to building wealth. The earlier you start, the more your money can grow, thanks to the magic of compounding. Even small amounts invested consistently can add up to life-changing sums over the years. A rich life is about freedom, the freedom to quit a job you hate, travel the world, or say yes to opportunities without worrying about the cost. It's about having choices, security, and the ability to take care of the people you love. Imagine waking up and knowing you're in control of your time and your future. This isn't just for lottery winners or people born into wealth, it's achievable for anyone willing to learn and take action. Ordinary people just like you are building wealth every day by making small, smart decisions and sticking with them. Investing is your most powerful tool to build that life, and it's much simpler than the financial industry wants you to believe. You don't need a finance degree or hours of research. With today's technology, you can start investing with just a few taps on your phone, and automation can do most of the heavy lifting for you. You don't need to track stocks all day. The best investors set up a solid, automated plan and let their money work in the background. This means you can focus on living your life, while your investments quietly grow over time. For the next few minutes, forget the myth that investing is only for the wealthy. No matter your background, age, or income, you can start building wealth today. The most important step is simply to begin. You can become a confident, successful investor if you decide to start. The journey begins with a single step, and every bit of progress counts. The steps are simple and actionable. You'll learn exactly what to do, one step at a time, so you never feel lost or overwhelmed. Are you ready to stop making excuses and start building your rich life? The choice is yours, and your future self will thank you for taking action today. Investing isn't gambling or an exclusive club. It's simply using your money to buy things that can make you more money. You don't need a fancy degree, a huge bank account, or insider knowledge to get started. In fact, investing is one of the most accessible ways for everyday people to build a brighter financial future. It's about making your money work for you, no matter how much you start with. When you invest, your money works for you, earning dividends, interest, and growth. Even small amounts invested regularly can add up over time. You don't have to be wealthy to benefit. Consistency is more important than size. This is the magic of compounding. Your earnings generate their own earnings, creating a snowball effect. The earlier you start, the more powerful this effect becomes, as your money has more time to grow and multiply. Regular people with regular jobs build wealth this way. Teachers, nurses, mechanics, and students, anyone can invest and watch their savings grow over the years. It's not about luck, it's about patience and persistence. Don't confuse investing with trading. Trading is high stress and risky. Investing is long-term, steady, and effective. Investors focus on the big picture, not the daily ups and downs. It's about building wealth slowly and surely, not chasing quick wins. True investing means buying and holding for years, letting time and compound growth do the work. The longer you stay invested, the more you benefit from the market's natural growth and recovery cycles. You're not trying to pick the next hot stock. You're participating in the growth of great companies and economies. By owning a piece of many businesses, you share in their success and innovation. Over time, that's a winning bet. History shows that patient investors are rewarded, even through ups and downs. Shift your mindset from, I need to save every penny, to, I need to put my pennies to work. Saving is important, but investing is what helps your money grow beyond what you could ever save alone. That's how you move from scarcity to abundance. It's not about how much you make, but how you use what you have. Your money becomes an active partner in building the life you want. Anyone can do this. The journey to financial freedom starts with a single step, and every step counts. The only thing you need is to start. No matter your background or income, investing is for you. So take that first step today. Before investing, ask yourself, why? What are you investing for? Vague wishes like, I want to be rich, don't work. Real goals are specific and have a timeline. For example, I want $20,000 for a house down payment in 5 years, or $1.5 million for retirement by age 60. Clear goals transform investing from a random activity into a purposeful mission. Your goals dictate your investment strategy. Short-term goals need safer investments. Long-term goals can handle more risk. Without goals, you're just guessing with your money. Write down your financial goals. Be specific about how much you need and by when. This isn't just a financial exercise, it's you designing your rich life. Once your goals are written, they become your roadmap. Every investment decision now has a clear purpose. Stay anchored to your goals, especially when the market gets rough. That's how you stay on course. Your goals are your anchor and your motivation. Let's break down the main investment tools you'll use to grow your money and secure your financial future. Understanding these basics is the first step toward making smart choices with your savings. Stocks represent ownership in a company. When you buy a stock, you're buying a small piece of that business. If the company grows and becomes more valuable, so does your investment. But remember, stocks can be unpredictable. Prices can rise and fall quickly, so there's always some risk involved. Bonds, on the other hand, are like lending your money to a company or government. In return, they promise to pay you interest over time and give your money back at the end of the term. Bonds are generally considered safer than stocks, but they usually offer lower returns. Picking individual stocks or bonds is tough, even for professionals. It takes a lot of research, time, and sometimes a bit of luck. Most people don't have the time or expertise to analyze every company or bond out there. That's why mutual funds, especially index funds, are the hero for most investors. They make investing much simpler and less stressful. A mutual fund pools money from many investors to buy a wide variety of assets like stocks and bonds. This gives you instant diversification, which means your money is spread out and not tied to the fate of just one company or investment. Index funds are a special type of mutual fund. Instead of trying to beat the market, they simply match the performance of a major market index, like the S&P 500. They're known for having very low fees, which means more of your money stays invested and working for you. Diversification is your best defense against risk. If one company fails or a single investment drops in value, it barely affects your overall portfolio. By spreading your money across many investments, you reduce the impact of any one loss. For beginners, a simple portfolio of low-cost index funds is the easiest and most effective way to build wealth over time. You don't need to be an expert or spend hours researching the market. With index funds, you get broad market exposure, low costs, and a set-it-and-forget-it strategy. This means you can invest with confidence and focus on your long-term goals. No need to be a stock-picking genius or stress over daily market swings. You can keep things simple and still succeed. Just own the market, keep investing regularly, and let time do the work. The longer you stay invested, the more your money can grow thanks to compounding. That's how you build wealth, slowly, steadily, and with confidence in your future. Now it's time to take action. Open an investment account. It's easier than opening a social media account and far more valuable. An investment account or brokerage account holds your investments. The main types are retirement accounts like a 401k or Roth IRA, and standard taxable accounts. Roth IRAs offer tax-free growth. Take advantage if you can. If your employer offers a 401k match, grab that free money first. Choose a reputable, low-cost brokerage like Vanguard, Fidelity, or Schwab. The process is simple. Go online, click Open an Account, and provide your basic info. Link your bank account to fund your investments. Don't let paperwork scare you. It's a one-time setup for a lifetime of wealth building. Completing this step turns you from a bystander into an investor. Take the leap. Your future self will thank you. Action beats intention every time. Investing isn't reckless gambling, it's about managing risk intelligently. Diversification is your safety net. Own a broad mix of companies, industries, and countries through index funds. Your time horizon matters. The longer you invest, the less short-term market swings matter. Don't panic when the market drops. See it as a sale, not a disaster. Asset allocation, how you split money between stocks and bonds, should match your age and goals. Younger investors can take more risk. Those closer to retirement should be more conservative. Target date funds can automate this for you, adjusting risk as you age. The biggest mistake? trying to time the market. No one can predict short-term moves, not even the experts. The real secret is time in the market, not timing the market. Invest a consistent amount every month. This is called dollar cost averaging. Automation and discipline beat emotion and guesswork. That's how you win long-term. You don't need a lot of money to start investing. Waiting is what costs you. Time is your most valuable asset. The earlier you start, the more your money compounds. Even $100 a month in your 20s can grow to hundreds of thousands by retirement. Modern brokerages let you buy fractional shares so you can start with just a few dollars. The key is building the habit, not the amount. Automate a small monthly transfer, even $25 or $50. Cut a small expense and redirect it to your investments. Starting small builds confidence and momentum. As your income grows, increase your contributions. Small beginnings lead to big results. The only mistake is not starting. The #1 tactic for long-term investing success: automation. Willpower fades, but automation never forgets. Set up an automatic transfer from your checking to your brokerage account every month. Then, automate your investments. Have your brokerage buy your chosen index fund automatically. This pay-yourself-first system runs in the background, building wealth while you live your life. Automation removes emotion and inconsistency, the two biggest enemies of investors. You won't skip a month or panic when the market dips. It takes about an hour to set up, but can be worth hundreds of thousands over your lifetime. 1 hour now for decades of effortless wealth building. Make automation your superpower. Let your system do the heavy lifting. You now have everything you need to start investing and change your financial life. Investing is simply putting your money to work for you. Set clear goals, use simple tools like index funds, and automate your plan. The journey is a marathon, not a sprint. There will be ups and downs, but your system keeps working. Don't panic when the market drops. Trust your plan and stay the course. Keep learning, but don't let the need for more knowledge become an excuse to delay. Perfection isn't required, action is. You can choose to keep waiting, or you can take 1 hour today to open your account and start investing. The power is in your hands. Stop waiting. Start investing. Your future self will thank you. Your rich life starts now.